Hey traders, do you want to know what I've done in the market this week? Well, just have a look to your left. That's right. It's been that type of week. You want to know how? Well, make sure you check out this week's weekend review video. Hey! Hey traders, Akil Stokes here, head currency trader at www.tradeempower.com, and welcome back to yet another weekend review video. As you can see, I am in a great mood, and for numerous reasons. First of all, I am done trading for the week. I've closed out all my positions. I'm taking an extended weekend, heading up to Foxwoods Resorts up in Connecticut to enjoy myself, and well, I'm excited about that. Secondly, I've just had an extremely great lunch. I used to live near this place called Pita Pit when I lived in the city, and I haven't been there in a while, so I had a wonderful chicken Caesar bacon wrap for lunch today. And lastly, as you saw in the intro, I have absolutely been spanking the markets this week in, of course, the most appropriate way possible. Now, if you are new, I'm usually not this outgoing. I guess I'm outgoing. I'm usually a little more humble than this. But you guys like the excitement, so I want to share the good news with you guys, especially since over the last month or so, I've been sharing with you more of the realities of trading, more of the harsh realities of trading, and that is dealing with drawdowns. September is historically a pretty negative month for me, and this year was no different. I struggled all the way through. I think out of the 4 weeks of trading, I only had one positive week. The rest were either drawdown or maybe break even. And what I did was I walked you guys through that pain. I said, listen, guys, I'm in a drawdown. I'm no different than you. I'm fighting through it. It's not fun. I want to quit, but you got to keep doing what you're doing. What do I say at the end of every video? Plan your trade, trade your plan. You got to do that. Now that we're out of September, out of my cursed month for some reason, now that we're out of September, October has started with a bang, and I had a mega week. And what's so great about it is that it's just proof that if you're able to get through the bad times, the good times seem that much more rewarding, and that's when you start to build confidence. Again, we're all going to go through drawdowns, guys. It's going to happen, but I guarantee it. I don't promise you much, but I promise you this. If you survive your first drawdown, if you do everything your plan says you're supposed to do and you make it through, and you come out of that drawdown and have a big month and get back into profit, the next drawdown will never hurt the same, because you'll have in the back of your head, you'll know that you've done it before. And if you've done it before, you can do it again. And that's what we're doing right now. Starting October with a bang, a big pip week for me. Now, I just don't want to brag about how much money I made. I just don't want to say, hey, here are all the winning trades for you. I actually want to make it educational. So what I did throughout the week was I picked a few trades. I took about 10 trades this week, and I'll share those with you later. But I picked two trades that I thought were the most educational and that you guys would get the most out of. And I kind of walked you through those trades and my thought process while they were going on throughout the week. So what I'm going to do is I'm going to flash you back to a few videos. And the first video explains the Aussie dollar trade. It's actually a recorded session from my private Monday training. I never let you guys see this, but I'm going to give you a little insight of our private, a portion of our private Monday training. I then update throughout the week, and then I'll see you guys at the very end just to wrap everything up. So sit back, grab a drink, and enjoy. If we look at this is the dollar index, guys. So this is basically the dollar against a handful of currency pairs. We've had about 11 of the last 12 months have been bullish, or 12 weeks, excuse me, not 12 months. 11 of the last 12 weeks have been bullish candles here. You can see we've essentially since middle of July 14th, we've had only one bearish candle, and even this is more like a doji candle, just an indecision candle. And also you can see the RSI actually came to about 90.62. So we've just been rallying dollar. And, you know, all good things don't last forever. Eventually, we've got to see some type of relief. And I know Jason's been saying the same thing as well. Eventually, we've got to see some type of pullback. It's going to come to the point where the market just gets exhausted, where the bulls are saying, hey, let's take some money out the market. Let's take some profits. And where the bears are going to have a little bit of chance to not necessarily regain some steam, but a little bit of chance to capitalize on a pullback. And we're seeing it. I mean, the RSI is overbought or oversold on almost all of the dollar crosses out there. So it's a relief is coming. The question is, we just don't know when. That's why we don't make, or that's why I don't encourage trying to make decisions off fundamentals. We still have to have we can have an idea, we can have a confirmation bias of what we think is going to happen, but we need some technicals to back it up. So looking across the dollar pairs, especially after Friday, one of the pairs that caught my attention was the Aussie dollar. And mainly because the Aussie dollar had came down to structure level. And it's the same thing. We've been rallying, falling off a cliff, just like euro dollar, just like pound dollar. But with those two pairs, we're in the middle of nowhere. With this specific Aussie dollar pair, we came into a weekly structure level right here. It was actually a daily structure level for me. I don't really watch it on the weekly. We came into a daily structure level. And what I saw was this. Again, I paid attention to candlestick formations. We had got sucked down here. And we've tested this level 1, 2, 3 times, and each time we've got a nice looking wick at the bottom. Meaning we've got a wick that the bears had pushed through, and the bulls had sucked it back up. We didn't get a nice higher high, higher close candle right here. Now the next day we have our non-farms report, which is people react to the number, and we got to push down. But what's important about that level, especially as we go down to the 4-hour, you can see we pushed down, we got sucked right back up and never created a lower low, lower close here. So this was one of the pairs that I was waiting for on the open, because we want to make sure there was no gaps or anything like that, but actually bought this on the open, looking for a rally up and made a few pips on that. Made about 50 pips on target 1. Holding on to target 2, stops are at break even now. Holding on for target 2 to see if we can get a test of this level right up here. I'm not getting too out of hand with target 2s because we're in a heavily bearish market, so I'm not expecting a full retracement. But I am gonna actively manage this thing and hey, see if I can get a big bang out of the second position. So what I wanted to do for you guys is kind of walk you through just where I'm at right now with the Aussie dollar trade. It is Monday, about 6:45 at night. Just got back into the office, and this is part of the active management part of trading. Again, with patterns, it's pretty simple. Targets, stops, either one gets hit or the other one gets hit. With structure-based trading, especially if you're shooting for extended targets, there's a little bit more active management that takes place, and that's what I want to explain. Now, I did a post earlier today on TradingView. I actually talked about this trade this morning in my 12-week transformation live question and answering session, our live training session that we do every Monday morning. Talked about this trade there, and then was bored a little bit, and I've been getting... Everyone's been saying, hey, Akil, post a TradingView more. I don't do it too much just because the majority of my work goes to our syndicate members, but I try to get on there once a week. So I did a post today, not giving a trade idea, but just talking more about the concept of managing this trade and really thinking like the other trader. Again, if you follow me on TradingView, you can go over and look at this, but on the original blog post, I was looking at the dollar index. We were up here at the time and saying I was expecting some relief. And as you can see, relief has come, which is good because I'm taking a bearish dollar position here. So the dollar index is lining up with exactly what I wanted to see. Technically, I don't use this for any of the analysis for the actual trade I'm in, but it's good to see just in general what the overall feel for the market is. Here on the right side is the Australian dollar. This is the trade I actually took, got involved down here at the bottom. And what I was doing was asking myself, I took target 1s off, made about 50 pips on target 1, and was asking myself, where are second targets going to be? And what I did was, well, it's like what I always tell you guys, think like the other trader. So I drew some fibs on, threw some harmonics on, looked at structure. I asked myself, if I were a bearish trader, if I were a trader looking to get bearish, looking to hop on the underlying trend, where would I likely get involved at? And I found two levels. One is right up here at the 127 extension. We have some 618 confluence as well in the form of a Fibonacci inversion. The other one is up here at previous structure at this 1618 zone. And as you can see throughout the day, the market has actually come up into our first zone and is trading there right now. In fact, if we go over to a live chart, you can see we're pushing up for another test. Now, I also said that just because the targets, I'm looking for an extended move on here. I hate saying this, I'm looking to milk the market for as much as it's willing to give me. I'm not trying to get everything out of it, but as much as it's willing to give me, I'm going to try and take advantage of it. So I'm paying close attention to the RSI. I'm looking for different things like oversold, overbought, hidden divergence, regular divergence. We're actually, we don't have any hidden divergence yet, which is a good sign because hidden divergence would say trend continuation. And I'm just looking at how we react once we get to that level that I predicted. And so far, so good. You know, I think that we're fighting past this structure level right here. We got rejected once. If you just take a look at the wick of this candle, we got rejected once, but I think there's a good chance that we'll fight past it and at least come to our higher structure level up here at 88 even. You know, a nice even handled number. The market likes those. Now, here's the one issue I have, and you can see I'm up about 94 pips right now in the second half of my position, so pretty good. Putting some money in the pocket. But here's the one thing that scares me. Aussie news coming out. And you guys know I always talk about Aussie news. I don't trade news events. I don't trade off news events, but there are certain news events that I worry about because they tend to move the market. And one of them is any type of Aussie news during the Asian session. And you can see tonight at 11:30, when I'm normally going to be fast asleep, we have cash rate coming out. We also have a bank rate statement coming out as well. Two major news events. And the last thing I want to do is give back everything I gained. The last thing, again, 50 pips is in the bag no matter what. I cashed that out. Stops are past break even. So there's no way I can lose money on this trade. However, you know, I don't want to give back the entirety of the second half of my position. So I am going to see how the market reacts as we get closer to these news events. I'm also going to do some research on them just to get an idea, a feel for what we can expect. And if I'm anywhere on the fence, I'm going to close out this position. There's no point in gambling. Yes, the market could shoot all the way up to, 90 even, but it could also go all the way back down. And, it's not worth, giving up. It's not worth giving up, again, 100 pips or 90 pips right now in hopes of shooting for this big one on a news event gamble. All right, gang, I'm back once again. It is Wednesday night, about 8 o'clock. Just had the turn of the hour, which is going to be very important as always. And I just wanted to keep you guys updated again on that Aussie dollar position and also throw in a new twist. Now, hopefully you guys read this by the time you're seeing this video, but I just finished writing a blog post for my blog, ratiotradingmentor.com, shameless plug. But it talked about, I called it a pretty good blog post because I thought it was pretty good. But it talked about just my overall, my overall thought process for getting involved in the Aussie trade and just my overall thought process on the dollar relief in general and how I'm using and kind of gauging the reaction to the different fundamental events that are coming out this week to judge the overall sentiment of the market and the public perception of dollar strength, dollar weakness, stuff like that. And in this post, I mentioned, despite this outlook of mine, I've only been able to involve myself in a single long-term dollar-based trade, but I'm currently watching the dollar yen like a hawk. And the reason I was watching the dollar yen, and we talked about this earlier in the live room, is simply because it's at a pretty good structure level. There's nothing fancy here. It's a pretty good structure level. If we look here on the daily, our lows of this level are right about here at essentially just call it 108 flat. And as we go down time frames, we've actually just been channeling at that level for a little bit. Now we go down one level deeper to the hourly chart, and here's what caught my attention. You can see that we were watching this earlier in the live room. There really wasn't anything here. We had a Fibonacci cluster zone, a 1618 inversion, 127 and 1414 extension there. Say that 3 times fast. And obviously a major structure zone based off that same daily level, but RSI wasn't over sold. There wasn't really any type of formation. We're kind of just stair stepping down. And I actually just involved myself in this trade a couple seconds ago, up about 4 pips already, which means absolutely nothing. But what I paid attention to is really the candlestick formations. And you can see the candlestick down here. We tested this level, and as soon as we got down here, we saw some bullish strength. All right, well, that's normal. We expect that. We came down, we tested again, thought we'd actually have a breakout to the downside. I really wanted to enter this earlier. Again, because I've just been hopping on over the last couple months or so, really. I've just been hopping on the dollar yen at different points in time and just profiting off it. It's been great for me, so I'm going to keep doing that. So I really wanted to enter at this moment because I thought it was a very low risk, long opportunity. I just didn't have a reason to. And, when I saw this, I'm like, yes, Akil, good job. You followed your plan. Good thing you didn't hop on because you would have been in a losing trade. And I actually would have. My stops would have been right down here about 107.80, taking a very small risk, and I would have been stopped out. But you can see we came down, got spiked back up, went sideways for a little while, and we came down again and got sucked back up for the second time. And what I did was I entered next bar market. So I entered after the close of the 8 o'clock candle. And again, it's very important we wait for these closes. So I'm now long dollar yen, which is the position I want to be, just based off the overall direction of this market. I still think we have room to go. We have until I think it's 110.50s at least before we hit that weekly resistance level. Now, another reason I'm doing this, and this is in the back of my mind, is just to hedge my position. We've been talking about this all week. The position I have on the Aussie dollar, we're up about, let me get a different chart for you guys. The position I have that long position on the Aussie dollar, and I'm essentially trailing stops. And again, based on the article I wrote, I'm trying to gauge the reaction, gauge when this dollar relief is going to run out of steam. I'm not getting greedy. I'm not going to try to shoot for the moon with this, but I'm going to try and get as much as I can out of it. And I'm paying really close attention to the structure level because this is the next resistance level where the market's going to, if it's going to break it, it's going to put up a fight first. But what I've done is I've kind of hedged my position because obviously on this pair, because I'm long, I hate staring at those numbers. On this pair, because I'm long, I'm buying the Aussie and I'm selling the dollar. On the dollar yen pair, because I'm long that pair as well, I'm buying the dollar and selling the yen. So on one hand, I'm selling the dollar. On the other hand, I'm buying the dollar, looking to sort of hedge my position, meaning that I'm in a win-win. I should be in a win-win scenario each way. Now, I always talk about don't trade off correlation. And before I get the people typing in, Akil, you always said, don't worry about the correlation between the pairs. I'm not. As you can see, and I explained, I entered each trade for completely different reasons, for valid reasons based off that price chart. I didn't enter dollar yen just to have an opposite position. There's a valid opportunity that I just walked you through. So it just happens to be a hedged position. But here's what most likely going to happen. We'll either see strength or weakness in the dollar, at least if this move happens by tomorrow before any Aussie news comes out. And, well, if we see strength in the dollar, I'll be stopped out of the remaining remaining balance of my Aussie position, which is right down here at 87.89 for about 120 pips, maybe 115 pips here, which isn't too bad. And that dollar yen trade, on the other hand, should spike up and make me some pretty good profit. If we see continued dollar weakness, well, I'm going to be stopped out of this dollar yen trade to the downside. I'll take about a 40-something pip loss. Let's call it 50 pip loss on that. But we should see the Aussie dollar continue to the upside, so I'll more than make up for that loss. And again, I don't talk about this much, especially in the weekend review videos or even the syndicate videos too much because it's more on the advanced side. But it just gives you that safety net to have a hedged position out there. But again, once you guys have realized it's not purposely hedged, I didn't enter it purposely to get on the other side and protect myself. It just happened to occur this way, and it's not I'm not sad when that happens. So that's an update for tonight. Again, as long as these trades, or as long as this Aussie dollar trade keeps going, I'll keep updating you on it. I'll keep rolling stops at structure as I have been. And like I said last time, next time I come to record a video, hopefully it's at a much higher place. And if not, hopefully the yen is. So we'll see. All right, guys. So just to update you and give you some closure on these trades, here's what happened. Again, at last we left off, I was talking about the dollar yen and the Aussie dollar and sort of that hedged position. If you look on your chart in front of you, the Aussie dollar is going to be on your left-hand side. The dollar yen is going to be on your right-hand side. And all of the action in this pair, or in these pairs, came prior to the FOMC meeting, FOMC minutes, not meeting. Aussie dollar ended up spiking down, stopping me out for my trail stops, ended up getting about 115 pips on my stop loss. So we saw some dollar strength there before the minutes came out. Those minutes ruined everything. But before those minutes came out, we saw some dollar strength during the first half of the New York session. Pushed my Aussie dollar down, taking me out for protective stops in the second half of my position, again for about 115 pips. However, on the dollar yen, if you remember, we entered right down here. We actually came down triple bottom / 2618 inside the live room, which was a little painful for me because I had to go from being up 50 pips down to minus 20, but it gave my live room members a chance to hop on the trade as well. And this thing rallied right up to our target ones. There was also, don't tell anyone, there's also an advanced pattern here as well, looking at it X to A to B, B to C, C to D, right there as well. And as you know, it worked out just how I had liked. I got some profit on a new trade. I got stopped out on a trade that I had going, but in total, I made more money than what I've lost. I didn't lose anything. I made more money than what I sacrificed if I would have took targets off at the very, very high. So it worked out perfectly for me. So aside from that, I took about 10 trades this week, was actually about a 60% trader, which is on the high side, usually about 50%. So I had 6 winners, 4 losers. It was funny. They came in pairs. It came 2 winners, then 2 losers, and 2 winners, then 2 losers. And then we ended today with 2 winners on some pretty good trades. Here's one from we put over to the syndicate in the morning and actually tried to record a syndicate video for this, shot it over to the trade floor Wednesday night and then shot a video in the morning for it. But a very pain-free trade here on dollar yen here. I got asked about this morning, and this is a trade where the money is just laying on the table, guys. This is one, it's tricky, but this is a trade where the money is laying on the table. You can see price action has moved up in the previous structure. And again, we've held this structure level twice in the past. We've got a lower low, lower close, putting us in a bearish rotation. Price action came up, got rejected, and it's basically putting a bag of money in front of you and saying, take me, take it, take it, take it. It doesn't get any simpler than this. Now, what's hard about it is that within this area was actually a failed cipher pattern. So including myself, many other traders took a loss on a cipher right here. And what's hard about this trade is that it's often very hard to come directly back off of a losing trade and then pull the trigger again, because you're like, well, the last one lost, so why would I get short again? That is very, very hard to do, and I understand that. But from a technical aspect, it doesn't get any easier than this as far as structured trading goes. Now, you can see pain-free. Watch this. Boom. Pow. Right down. It actually gave you another opportunity to enter on the 26.18. So if you didn't make money right here, it came back up, putting the money in front of you again, saying, hey, this is the last time I'm going to give it to you. Come on, you better take it. And then it ran. So a very good trade right there. And then we had a nice winner on pound dollar as well, a bat pattern in the live room this Thursday morning. So I don't know what else to say. It's been a great day. No better way for me to ride off into the sunset. With that being said, next week, guess what? It's an entirely new trading week. All of this goodness and profit making means nothing. I've got to come back. I've got to refocus, because the worst thing you can do is get overconfident and blow everything that you blow all the hard work you did this week on sorry, for lack of a better term, on some stupid trading or emotional trading next week. Don't get overconfident when you have these win streaks, because overconfidence, greed, and fear, those are the 2 things that kill traders. Greed and fear. You get greedy, the market will punish you for it. And it'll punish you in the form of your account size. So you come back, level-headed, start all over again. Hope you guys enjoyed this. It felt like one of my better videos, guys. If it was, if you liked it, especially if you like the stuff we've been doing about me recording videos throughout the week, kind of updating you on the mental side of trades, just shoot me a message underneath here. Shoot it in the comment box. Say, Akil, I like this. Keep it up. Akil, I hate this. Don't do it anymore. Just be constructive. Let me know what you guys think. Also, if you haven't done so already and you have the time, especially on a holiday weekend, or at least here in the States, well, I don't know when our next holiday is, but if you have the time, join me in the live trading room. I guarantee there's nothing like it. I haven't been in a lot of other live trading rooms, but I feel pretty confident in myself in saying that this is the best live trading room you're going to be in as far as learning and entertainment value. You get to hear me talk for 3 hours a day. How cool is that? I hope I didn't I scared some of you guys away. Like, I was on board, Akil, until you said, I got to sit with you for 3 hours a day. I'm out of here. But spend some time there. It's fun. We offer a free 1-week trial. Just go to www.tradingpower.com. Go to Trader Resources and scroll down to Akil's live FX ratio room, whatever it's called. Look for my name and sign up for the free trial. Until next time, guys, I'm going to enjoy my weekend. Take some of these profits from this week and see what the crap table has in store for me. And as always, plan your trade your plan. Have a safe trading day tomorrow. Have